Good afternoon, everyone. So we took a little paper cut yesterday. We had a reasonably tight stop loss on. I had a practically unlevered position, so didn't lose much taking the bet on Bitcoin calling a bottom there when there was a fair amount of geometric confluence. Now there were some warning signs, with the Vegas waves being the strongest ones, but there were certainly warning signs, and it wasn't a perfect trade. But part of being a good trader is you need to be able to take enough trades to stack probabilities in your favor. On a sample size of 1, 2, even 10 trades, it's very difficult to express your edge on the market. Uh, the edge is best expressed over a series of hundreds of trades. So whenever you see a good, reasonably high probability opportunity, and more importantly, a very good, attractive risk reward, and you've done some analysis that is technically valid, then I highly recommend you take those trades. You have to be tight with your risk management, but the idea is lots of little paper cuts followed by big wins, and the occasional small wins too. So I've been tracking the trade, stalking it since getting stopped out, and my opinion has changed a little bit as to what might be going on. Recall that I found a lot of bullish signals after the big move, and then we were counting on a retracement of that big move to continue the upwards trend. And while that's certainly a possibility, now geometry, indicators, and general shape of waves is leaning me in the other direction. I'm now leaning squarely more bearish. Of course, it would have been great to know that 2 or 3 days ago, but that sometimes the evidence doesn't present itself very clearly. So while I'm not in a trade right now and I'm not looking to set one up immediately, I do smell an opportunity. So I just wanted to share some of my analysis. First things first, as you guys are aware by now, my process starts with geometry. That's the thing I consider first. So generally speaking, before I even mark up a chart, I just stare at it for a while, try to figure out what's going on from a structural geometry perspective. So before we do an Elliott count and talk about Elliott waves, I just wanted to highlight that a hallmark of trying to figure out what's going on geometrically is to identify whether it's the Fibonacci relationships or geometrical patterns like a pitchfork or a channel or even a Fibonacci circle or arc with Gann square. Whatever tool you use, you can slap them all on at the same time or one at a time, but I think it's important to figure out which of those tools can be arranged in such a way, it can be altered in terms of the geometry so that it is a tool that's most predictive of what price might do. And obviously the best way to assess that is to see what kind of responses it has had historically and try to identify the tools to which price seems to be responding best. Now, just because it's responded very well to a particular channel or a particular fib pull or a particular geometrical tool that you're using, even as recently as a minute ago, does not in any way guarantee that it's going to continue to behave that way in the future. Nevertheless, since we are playing probabilities when we trade, it's a good indicator for where to focus your analysis. So this is a chart that I posted on the live trade. I just wanted to talk about it a little bit. The first thing I note is obviously the separation from the Vegas waves is getting quite extreme. This does not look like a trend that's about to end. Even just looking to the left of it and even slightly to the right, you can see that as trends end, price tends to converge closer to the Vegas waves. At any point here, you can make that assessment, or here. Not the case right now. In fact, it seems like the trend may be accelerating, which is obviously quite discouraging if you're looking to get long. The other thing I'll note is that the candlestick analysis that I shared with you guys, I guess like 4 videos ago or so, where I'm looking at kind of the length of the bodies here. When the length of the bodies are increasing in this fashion, where clearly here it was short, long, and then really tiny, which signaled a reversal. There was a reversal, and then there was long, longer, a little bit of sideways fuckery here, short again, very long, and even longer still. When you see sequentially increasing bodies of candlesticks at a meaningful time frame, like an hour or so, well, that does not signal a market turn anytime soon. So I think we have to kind of start there and assess the probability of this thing continuing to go down and even put in a new low below the 5.8K low that it last put in as a primary possibility. I'm not saying it gets there, but before, my mind really wasn't there. The volume that followed this move and the separation from the Vegas waves on the upside, even up to here, you could see there was quite a bit of separation before this retracement. And just everything about the move in terms of its measurements and how impulsive it felt signaled to me that we might be going upwards more. And of course, everything that followed impulsively, it's done to the downside even more so. Look at how sharp this move is, how vicious the angle is. If this is 45 degrees or so, this looks like it's almost vertical, right? So very difficult to call this or anything anywhere near this a bottom with any kind of confidence. I've noticed that, as I noted in my comments in text, that this fib pull from this low to this high, swing low to swing high, has been, quite honestly, a failure in predicting price. There was a little bit of a reaction here at the 236, obviously, that's quite obvious. Then there was a little bit of a pause at 382. But ever since then, the 50 was violated and then acted a little bit as resistance, but can't really hang your hat on that being much of a response on the way down. And then the 618, I mean, it took not even a pitch stop, a very brief stop. It sliced right through it. It's gone through the 786. It's now nearing the 886. So I am going to officially call this fib unimportant to what's going on right now. So I'm going to just take it off the chart. Not forever. I think it's interesting. The 886 could be where it stops, but I'm going to defer to this fib channel that I posted here. I'm moving it down so you can see where it starts up here, and then anchored on the low. Swing high to swing low and pull to the next lower high. And price has been, obviously to the left of it, it's been such a good guide for price, but even to the right so far, the price has responded very well to this. You can see here there was a reaction. Here there was a very substantial reaction, almost like a mirror image of what went on the other side. Not much here, but remember, this is the 50% line, so it's not technically a fib sequence number. 50% is there for psychological reasons, but not for Fibonacci reasons. And at the 618, it nailed it. It wicked a little bit past through, and now is paused there. It doesn't mean it's going to reverse, but clearly there's been a response here, and this very vicious drop was halted by, I don't see any other piece of geometry beyond this fib channel, and also the outermost boundary of the 200% pitchfork drawn from here to here to here. Right, so there's some confluence there, but this pitchfork, now that this 200% lower boundary has been violated, to me is also unimportant. So I'm going to remove it from my primary consideration. Not to say that I'll never look at it, but we're constantly on a quest to find which tools are giving you the best clues. It's like solving a puzzle. Once you move over from one piece of the puzzle and you're moving on to the next piece, there might be a different shading or color scheme or pattern to recognize, and that's really what you're trying to do with the geometry. So having discarded this pitchfork, and any pitchfork that was to the upside for obvious reasons is irrelevant, I went back and drew this one from the same fib pull that I did this channel fib on. Same swing high, same swing low, and then obviously the lower high pivot as well. So it's basically a pitchfork version of this fib channel, and this thing is confluent with the fib channel at the 786, which would be around here. That would be at 55.50-ish, give or take, depending on your exchange. So geometrically, that to me seems like a high probability zone. It looks right? I mean, this being so vicious, at some point this 3 that it's got to be a 3 given how sharp and aggressive it is, quite extended, nevertheless probably a 3 of some sort. Whatever this ends, there's going to be some sideways 4 And given how impulsively downwards this has been, I'm not expecting the longest 4 in the world. Maybe a short little triangle, a flat correction, or some kind of small combo to consume some time. But then, a resumption of that drop would geometrically, it aligns reasonably well with this potential spot here. So I'm gonna just mark it up on my chart as a region of interest. Okay, this area from, call it 54.60 to 56.15 or so, give or take, a little early to be calling a bottom, but that does seem like, if this is an impulse down, which it surely looks like it to me, you could count it as a double or even a triple zigzag, but to me it just looks like an impulse. This could be a place where it stops. And as far as measurements, just to gain some idea of what Elliott would say, if this is 1, 2, and we're on some kind of 3 here, well, let's say that somewhere around this channel, this fib channel 618 will be the termination point of the 3. If we haven't reached it already, we may actually have just put in the 3, possible. But so from 0 to, let's call it here, or even give it a little bit more room to go down. Off the 4, wherever the 4 may end. I mean, if this is a 5 in, and this is the 3, and this is the 1 of this potential 3 of an impulse, then we're expecting the 4 to retrace to some level in the price range of the 4 of the lower degree, so around here. But that seems quite high to me, given how impulsive this has been. So I'm gonna maybe anchor it off of this fib channel level, the 50%, and between 50 to 618, it's a pretty probable range. Again, I'm not trying to make predictions here. I'm just trying to do a sanity check. And, well, a little undershot of that would get you to this level, right? So it's not crazy to think that price might end up here. Another tool that I've used, which we may play with here a little bit, is this these fib arcs. So from swing high to swing low here. Let me get it exactly right on. No, that was the wrong tool. Okay, so now we need to move the geometry around so that this makes some sense as far as explaining the price moves. And look, there's a response here, response here. It's pretty close. It's pretty close. Actually, I may have nailed it. 382, 50% right here. The 618 didn't do much there, but and now we're now roughly on the 786. I might be able to compress it a little bit, maybe. Well, let me just get rid of this. You can see I have a circle from a higher degree up there, so eliminated that. And can we rearrange it so that it's a little bit more predictive of what happened in price? Well, look, you can move it up and down a little bit here or there, but the point is, right at around 100% of the 100% arc pulled from swing high to swing low is pretty confluent with this area, with this little hot box we drew, potentially implying a little bit, maybe around here, right around the 50% of this potential 3 being in. This I'm just going to take out because it was more of a sanity check. It's relatively imprecise since we don't know if this move is even done. But this is seeming like a pretty important geometrical area between 5,400 to 5,600, give or take, right? So I'm going to pay a lot of attention to what's going on there. And let's see what's going on with the oscillators. Well, look, this ADX just peaking like this is almost well, it's a very high confidence tell that there's more down to go for me, just having worked with this indicator for a long time. Every time that you see this big red dilly of a move, and frankly it works the other way too, green, whenever there's a peak like this, and actually this is the way to use this Lynda 310 MACD as well, whenever you see a big peak like this, a very high percentage of the time, I want to say almost 90%, it's never 100, but almost 90% of the time, what that means is after this big peak, there's going to be a retracement and then a new high or a new low, depending on which way you're headed. So surely enough, you could see in this Linda 310, this is how a lot of traders use it for day trading or shorter durations. They look at this big peak, and what you call a peak is a little subjective, because is this a peak? Is this a peak? I would say no. It's got to be, you know, one standard deviation minimum, if not two standard deviations higher in length, whether up or down, depending on where the trend is going. So I would call that a peak. I would call this a peak right here, and so on and so forth. I don't see any others here, but so you can see here it corresponds with this move here, this vicious move down, and as the theory states, there's a little bit of retracement and then one more down, and the way that you might get some comfort that that might be the bottom is the oscillator just decreases in size by a substantial amount. It returns back to, you know, being in the bell curve, so to speak. This is clearly off the bell curve by at least one, if not two standard deviations. So same thing here. This big peak was put in here, and then there was a retracement, just like the theory states, and then another high. But look at the oscillator, much lower, right? So I use the ADX a little bit similar to that. There are some other indications that for how aggressive a trend is. For example, I like to compare it, the peak here to the peak of the green when it was going up. Well, it's very comparable now. It might even get to exceed this. So from a momentum standpoint, just given that there's a peak here, same peak here, a higher peak here, a little bit of a break here, and then this massive move up, this is clearly to me the stronger trend than on the move up. So is it likely to end here? I think very, very unlikely. Very unlikely. Whatever was looking like bullish divergence even just, you know, half a day ago has now turned into just confirmation of the price. You know, everything's moving downwards. The MACD isn't quite yet, but you know, these two peaks are very, very, very similar. And that's honestly not even what I use the 310 MACD for anyway. So this is looking like more down almost for sure to me. So with that as context, let's try to take a stab at an Elliott count. From an Elliott perspective, I don't think that there's a lot of high probability ways to count this beyond it being an impulse. So why don't we just start there? The reason why I initially thought that was unlikely was because this three-wave move here looks so three-wave to me. In one of the prior videos that I did a few days ago, I did confirm that there's a possibility that this is a leading diag with a short one here that you can barely see at the 1 hour time frame. You'd have to really zoom in. And then, you know, this being the 3 and then this being an extended 5, an expanding leading diag. That does play as a 1, and the retracement is deep enough to qualify as a 2. And given that the retracement I had is a double zigzag, that makes a lot of sense, just from a shape perspective. And then another leading diag to start the 3. I don't love that. However, okay, the story does play well if you consider that it was a leading diag, double zigzag retracement, and another leading diag that's expanding. And then because the reason why it plays well is that there's a deep retracement. Okay, there's a deep retracement here, and this diag and 1, 2 could very credibly be considered as part of the basing process of this entire consolidation pattern. In Elliott wave theory, it might be, you know, 1, 2 in the beginning of a 3 here, but in any other form of TA, I would bundle this together as one pattern or one piece of chart to analyze the same way, and it's just sideways fuckery, consolidation. There's all the momentum being, you know, shaved off of this move. All the people that reached here and realized, well, momentum has stopped, they're taking profit, and people are shorting, people are selling, you know, and there might be some FOMO coming in here to support the prices. All this is going down, but ultimately, I mean, the bulls lose out and the bears win out. That's very obvious, right? So 1, 2, and then a 1, 2 here, not crazy, and in fact could very possibly explain why this is so extended. Is if the 1, 2 of this 3 was part of this basing process here, and you know, this is, what is it, a 5,800 to 8. I mean, it was almost a 3,000 point move in a very short amount of time. Well, if all those people bailed because they'd seen gains that they hadn't had on Bitcoin for, you know, almost a year, or not that long, but almost 8 or 9 months. Well, it makes sense that this thing dropped very precipitously, and that it's only accelerating as some of the folks who might have bought into here or here are flipping now. Okay. You can see also the short interest curve, I think, has been increasing quite a bit as this move is going down. So that, yeah, if that continues, could potentially be fuel to set this up as an explosive bottom that, you know, you see a nice shot upward. So that's kind of the obvious trade to me. Obviously, shorting this further on the way down is a possibility too, given what I said around momentum. But, you know, after a big vicious move like this, not sure that that's the on a risk-adjusted basis the best move. We might consider it depending on what happens here. But right now, the big trade I'm eyeing is to get long around here if it gets down there. Okay. Let's measure this sucker. If this is 1, 2, some kind of 3 here, 4 and 5. Let's just. I'm just putting this to take up space. I'm not saying this is anything other than I'm beginning a count, so don't pay attention to where I placed it. But, you know, this is quite the extended 3. Quite the extended 3. So before we measure it or any of that stuff, does it even channel well? This is always, for me, a very important consideration. So I'm going to fix the scale here, or lock the scale so that I don't lose all my work on the geometry. And then I'm going to zoom in. Okay. You can see just how ugly it is the closer I get to shorter time frame I get. But this would be the 1, 2, 2 ending here. Now, how would you count the rest of it? Well, if that's 1, 2, unless this is 3, 4, and we just put the 5 in and we're done, which is absolutely a possibility, then all of this must be the 3, right? So let's see. Here's the 2. Let's just play as if all this is this 3, and if all of this is the 3 and the 2 is this sharp, then man, this has got to be the 4, right? Just visually, that's the first thing your eye sets on, and then you would pull it to the 3, and right around here, and well, the 5 certainly overshot the boundary here. So it's a possibility that this was the 3, this was the 4, and this is the 5 from a channeling perspective. Now, the fact that the 5 is so aggressive and has such a steep slope, I don't love that. Typically, that's not the case for 5s. They tend to have a lower slope, less steep slope than the 3. Nevertheless, you know, certainly possible. Now, what about a higher degree? Okay, at a higher degree, if this is 1, 2, and all of this might be the 3, right? Well, let's see. Let's say this is the end of the 3. Channel it as if it were. And again, all we're doing here is playing around with geometry, trying to experiment. So the temporary channel says 1 to 3, pull to the 2, which would be here. We'd expect the 4 to end somewhere around here. Let me just pull this for somewhere around this boundary line here. Now, as I've said many times, I haven't found that to be that predictive. I've found the 4 to almost always break out of the channel, and that would make a lot of sense. That it would. You know, if this is the 4 of the 3, well, I would expect the 4 of the entire move to take even longer and be more sideways. So, breaking out of this channel could make a lot of sense. So, does this move work as a 1, 2, 3, either in progress or done, and then a 4 sideways with one more 5 of the same degree downwards? Well, I mean, it is clearly extremely extended, to say the very least, right? So let's see how extended it really is. Go from here to here to the 2. I mean, I don't even have it in a setting that begins to talk about how extended this could be. So I'm going to put. Okay, it looks like I don't need to go down that far. So, whoops. What is it? 300%. Well, it's pretty damn close to 3x the 1 in length. It's not crazy, you know, not crazy to call this a 3, especially given how it started off as a diag, which is, you know, we're expecting the 3 that ensues after a diag with some consolidation at the 2 and then another diag at the 1 to be quite extended. So I'm not bothered by the length of it. I mean, this could very credibly all be the 3. Now, what if it's the 2? Or what if it's the 5, sorry, and this is the 3? Well, it does measure better and more standard because 1618 is here. So if this was the 3, then, you know, it overshot it, but not by a ton. And then this could be, looks like a flat pattern for the 4, an expanded flat. A, B, C, 1, 2, 3, 4, 5, something like that. I don't think this would be the 3, and this, if it's anything, it would be a zigzag, would be the 4. That doesn't make as much sense to me. So if this is going to be the 4, I would count it as an expanded flat, given that it is a 4 and we're looking for a sideways pattern, but also the consumption of time here is a little bit more aligned with the consumption of time here of this sharp 2. Now, that's one thing that bothers me is, from time perspective, from here to here was 39 bars, and we're dealing with a move that from here to, well, from here to here is 61 bars, right? Yeah, it's longer. It's longer, certainly. But first of all, it's extremely short if this is the 4 of the whole thing. It is, I don't think it's even remotely close to the 236, is it? Let's see. Yeah, the net retracement of this thing. I say net because it's an expanded flat, so you don't count it from the from the price extreme bottom here. You count it from the orthodox bottom to the high. I mean, it falls way short of 236. But when measured off of here, the 2 here, well, it's still short, but less short, and a lot closer to 236. Right. So, to me, just given the geometry we talked about earlier, and the fact that this is relatively short in length, and longer, but not by that much relative to this very sharp move up here on the 2, to me, this looks more to me as the 4 of the 3. Also, by the time a 3 ends, it is very typical to start seeing divergence, bullish divergence, or bearish, depending on which direction the impulse is. This is an impulsive move down, so I want to start seeing bullish divergence here, at least at 1 or 2, if not more, if not all of the indicators that the 3 is about to end or has come to an end, and we're not seeing any of that. We're seeing clear warning signals that say more down. So my bias right now is this is not 1, 2, 3, 4, 5 done, but rather it's 1, 2, all of this, the 3, and it looks like the 3 may not even be done. You know, so 3 could be stop at around 300%, maybe a little bit lower. That would be my primary count. Now, what about the flip side? Since we always want to consider both sides, well, how do you count this thing as anything but an impulsive move unless it's a multi-zigzag correction? I think this being an ABC, ABC, and then all of this being, you know, the mother of all flat corrections, I think is an unlikely count here. I mean, you know, the most likely length of the C wave of a flat is 100% of the A wave, and then after that it's like 127% or so. Even for an expanded flat, the most likely length of the C relative to the A is about 130%. So this thing is just way off the reservation and, you know, unlikely, right? We can't dismiss it completely, but it's much more likely to be a multi-zigzag combo, where this is a leading diag A, this thing could be a B, and then you've got a C that ends maybe around here. Even then the C's extended, but you know the wave ratio isn't so crazy anymore. It's probably like 1618 or so, let's see. Yeah, I mean, all the way down here would be even greater than 1618, right? So like A, B, C, X, A, B, C, or something. That's the only count I can come up with that from a geometry standpoint, from a wave measurement standpoint, as well as from explaining. Wow, as I'm talking, look, the price has gone down some more, right? So, I mean, this just looks so impulsive to me that even a double or even a triple zigzag doesn't make a ton of sense. You could have A, B, C all the way down here, X, all of this A, B, and C again. But if that's the case, then this can't be. Well, it could be, but it's highly unlikely to be a corrective structure because then it will go below this bottom to put in a new low, right? So, I don't. Stepping back to the 4-hour or 1-day time frame, what kind of pattern would explain such a thing? Beyond me. Just not that credible for this to be very much else other than an impulse. So the other thing I like about this is it aligns with the geometry, right? So if the 3 ends somewhere around here, let's call it the 786 of this fib arc, which again, because I locked the axis, the y-axis, and the scale, this is untouched from when we did our analysis. So for it to be end around here wouldn't surprise me one bit, and then it retraces somewhere around here, maybe this level, and then one more down to the 5. Well, if the 1 is equal to the 5 or comes close, at around here, hold on, let me just get this at 100% first. Right around here, gets pretty close. And given how extended is 3, it's more likely that it would be, between 50 to 618 as we did prior when we did our sanity check methodology. And if this is a wide 4 and then there's one more move down, I'm obviously, yeah, with this move down now more, the retracement would be a little lighter. Yeah, it falls. Again, is it really here? I'm just putting it here because there's confluence with these geometry tools, but it could go higher, it could go lower. But if it obeys these fib channel lines, different fib levels, as it has on the way down and on the way up, then this wouldn't be a crazy place for a 4 to end. And 50 to 618 of the 0 to 3 would land you squarely around this area of confluence. So that's kind of, I'm going with that as a primary count, that this is an impulse. The 3 has yet to be put in fully, and well, how that fits into the bigger picture is something that we'll have to consider if we get there. But just focusing on this move, man, it looks like it's headed here. So possible trade setups would be to, when we get confirmation that the 3 is over, as the 4 starts to get put in and we start seeing potentially some bullish divergence on these vicious looking indicators right now, the ADX would have to way come off for me to be thinking that a 4 is even in yet. But if we get to the point where we see some of those signs of bearish divergence or bullish divergence, and the 4 starts to measure a decent amount, I mean, given how impulsive this was, I wouldn't even expect necessarily 382 would be closer to 236, but some kind of retracement that aligns with the geometry here, I might put on a short. That could be the next trade, but certainly after the next retracement and the next move down, if that's what happens, that is a very good long opportunity, because this is so extended, and this being either 3-wave or diagonal in nature forces it to be a 1-2 here if it's an impulse, and so the rest of it is just so extended relative to the length of the 1 that this might be one of those trades where if I get stopped out here, I'll just keep buying it all the way down in strategic spots based on whatever analysis I do at the time. But that seems to me like the big trade. And then whether the short the 4 or not, well, I'll assess that when this thing stops. But it is not looking like it's stopping. So for now, I'm on the sidelines and watching carefully and measuring every move.